Here's why you should pay your taxes and insurance separately. An escrow or impound account is when you have your property taxes and homeowners insurance included in your monthly payment. Your lender will add up the yearly premiums for your taxes and insurance, divide them by 12, and add them to your payment. Depending on which loan you have, you may have the option to pay these separate instead of in your payment. And while many choose to have an escrow account because it's more convenient just to make that one payment, I personally prefer to pay my taxes and insurance separately, and here's why. Number one, when you have an escrow account, you're prepaying your taxes and insurance in a non-interest bearing account. I personally prefer to invest the money myself and pay the taxes and insurance when they're due instead of placing those funds in an account that makes no interest. Even if it's in a savings account making minimal interest, it's still better than nothing. Number two is the closing costs are less. When you have an escrow account, you have to set aside money in the escrow account, so when the taxes and insurance are due, there's enough money in the account. So if you pay them separately, we can omit this, and this will lower your cash to close when you're financing a home. And number three is payment fluctuation. When you have an escrow account, the amount of your property taxes and homeowners insurance changes yearly. When you have a fixed rate mortgage, the payment will not change and you won't have to worry about fluctuations in your mortgage payment.